Mr. Gurdayal Singh, he has been helping PMCAA for many years. Almost every time we have a meeting, we haven't had for 2-3 years, but every meeting he comes and he basically educates about our finances, doctors really don't have much knowledge about this, but his job is to teach the doctors how we can invest on our investments. Gurdayal Singh.
Thank you, Doctor. I come here to teach, but I tell you, I go back home every year by learning a lot more. And I still remember the last time, I think the meeting was in Long Beach. And Dr. Gill, who does the surgeries like, robotics or something, that was amazing. And my speech was after that, and I was totally like, wow, that time has come now. Thank you, Ji. Again, Gurdayal Singh, I'm from Los Angeles area, and I have been working with a lot of you, of course, can't pinpoint, but I'm working with a lot of you, and it's been pleasure, and thank you very much. I still remember, I think it was 99, if I'm not mistaken, Dr. Grewal was the president, and the meeting was in San Francisco. I could be a year or two here or there. And at that time, one of our good friends from LA, Dr. Sahota, sent me there. And I was thinking, what can I do here? But right after that, I met with Dr. Softa. I tell you, rest is history. Patiala Medical is on my calendar for every year. And last 2-3 years didn't happen. It was literally boring, like something is missing. But thank you very much. So over the years, we've definitely grown up pretty big. And right now, just to give you, without looking at my things, we are about like 5 in our group. It's me, we call like face of the company. Dr. Baker, he's an investment person. Trust me, go find out, do the Google or whatever. The doctor with the, so to speak, in the investment is very rare commodity. Of course, then we have a consultant, John, and then we have a CPA. The CPA, Shay, we have like with the 45 CPAs under him. And after that, we have an attorney. And attorney is one of the best attorney, which is estate planning attorney and asset protection attorney. Trust me, you all are very successful. You all have done pretty good in your life. You have accumulated a lot of wealth. But can we save it? Can we make sure that we do not lose it to some wrong things and stuff? So that's why we have an attorney.
Somebody wants to give donation to local college, universities, and
okay.
How can we defer it over 10-15 years?
Thank you very much, Dr. Chopra. By the way, I changed few of my slides, last couple of days after talking and meeting with a lot of people. People asked, he was talking to me yesterday about I'm ready to give a donation. I think one of your friend gave a donation. Okay.
He's actually not doctor, he's a cattle farmer, big farmer.
Okay.
He gave $5 million to do
Right.
And they named a department after it.
Department after it, right. And you probably hear a lot of things, hey, I have a chair in that university and all those things. My request is before you do that, by giving a $5 million up front, okay, yes, you are kind of like getting away from your own money. But you can promise $5 million with a certain number and certain things. And over the years, you give them whatever you promised, okay? But you can still use that money, almost 90% of that money, okay? I do have a couple of points in there when I heard him. I said, you can give IRS or anybody donation today, okay? And you can get a deduction today, and you can wait till the second person, spouse, like husband, wife, or wife passes away, you don't have to pay literally physical money. So there are IRS codes on there. Again, I'm just talking here there. You have heard big names, Bill Gates, Warren Buffett, or Kennedys, the Rockefellers, and all those things. How are they running their life and the whole thing right now? Look at the Clintons. Chelsea gets $1 million from her parents' foundation. Bill Clinton, and you just name anybody, Bill Gates, or this Twitter guy, and everybody said one thing: I am not going to give anything to my kids. I'm going to donate everything. I'm going to give it to the charity, and then let the kids. Okay, thank you, G. Let the kids earn their own. Give me one name that Bill Gates gave that donation to. Seriously. Warren Buffett. Anybody? If
Give us 5%.
no, they don't even give 5%. You have to give the 5%, but the thing is, first of all, they make their own charity. So money comes from right pocket to the left pocket. I still control everything. Okay? But it's my own charity. Seriously. Learn these things, please. I request you. There's nothing illegal. There's nothing illegal here. Everything, if you go to the point and everything, you will be happy. But let me start with this thing. Let's have a little fun here. Okay? Okay. So let's do it. Think of a number between 1 and 10. Just think quickly. I'm sure you can do it in your mind. You don't need a pen and paper or anything. Just think about it. Okay? I'm going to move fast. Multiply that number by 9. You need a calculator? Anybody needs a calculator? What? Oh, good. That's what I expect. Okay. Multiply that by 9. If the number is 2-digit, add them. If the number is 2-digit, okay, when you multiply by 9, if it's a 2-digit, just add them together. Okay? Now subtract 5. Anybody? You still here? Want to go back? Okay, all right. Determine which letter in the alphabet is that. A is equal to 1, B is equal to 2, or 3 is equal to C, that way. The number you have it, what alphabet is that? No. Don't say. Keep it. The fun is coming, so just keep it to yourself. Let's see how many people get this thing. Anybody wants me to go back? We're okay? All right. Think of a country with that letter. You just got. Think of a country that starts with that letter. Okay? Remember the last letter of the name of that country. I know. It's fun. You're going to have fun. All right? Okay, now think of an animal that starts with the last letter of that, All right, we're almost there. Now you have to think, you got the animal, right? Yeah. So the last letter of animal, think.
It wasn't an animal, it was a K. Oh, sorry.
Yeah, think of an animal with the K.
Oh, okay. You said that.
Am I right? No, I said think of an animal, right? So now think the name of remember the last letter of the animal? Okay, think of a fruit that starts with the letter. Don't say it. All right? Are we ready?
Yes.
Is kangaroo in Denmark eating orange? Right? I'm glad that everybody's paying attention. All right, thank you. I'm sure. All right. This is serious now. If something you thought to be true wasn't true, when would you like to know? Right away. Yesterday. Why it was hidden from me, why I didn't get this thing before. So that's the main aim of our business. That's the main aim, that we make sure things that are like, so to speak, we call like underlines or hidden, we bring that thing out in front of everybody. Okay, the people always ask me who I am and what I do. So, of course, people call me, of course, I got a lot of names. I got name like, because of Gurdayal, G Money. Okay, people call me G Money. He's a guy with the money. By the way, if you have any TikTok or your kids, just follow Money with Gurdayal. Okay, it's one of the very high-end rated TikTok, Instagram and everything. But not that I'm trying to make it impress you on those things, but I am a family CFO. And one thing, every company has a CFO. We know who CFO is? Yeah. Chief Financial Officer. Give me one successful company that does not have a CFO. Okay? So why not you as a family? You should have a CFO. I'm sorry?
I thought my wife was here.
Well, she is, but let me tell you, you're absolutely right, Dr. Chopra. I mean, we can all say it, you just said it, but we can always, say it or feel it that way. But the question is, your wife or your family, only concern is when it's your money, your emotions are attached to your money. And you cannot and do not make the decisions those are supposed to be make right way. Okay, so I'm in a financial services business and take a very unique approach to help people more that they are transferring their money unknowingly, unnecessarily, unintentionally. And I'll give you some proofs. We are not going to go in detail. We are all losing money unknowingly, unintentionally, and unintendedly. Think about it. As I said, we probably go over this thing. Again, I'm not here to teach anybody. I cannot teach. You guys are very smart. Most of my presentation is going to be questions. And what I want you to do is think about those questions, literally look into it. If you don't have an answer, call me, talk to me, we'll give you the answers. Okay, by the way, just to let you know, at the back, I do have some pens, have a phone number. Otherwise, there is a QR code, little paper. You just click the photo and you get all my information in there. So now, what is your biggest expense? Oh, by the way, I have few $10 bills here. The right answer will get the $10. What is your biggest expense? Anybody wants to volunteer? Insurance. Health insurance. Sorry? Sorry. But remember, they're shopping for you. They want to look good for you. Hanji, somebody is here. Anybody? Huh? Oh, you got the $10. I mean, you must have seen my presentation before, but you're right. Please, whenever you are around there. Okay, yes, the taxes is the biggest expense, and we don't realize that. We do not realize that I get my home, my mortgage, and seriously, my kids' college education, these are the answers that I get. The first time I got my wife, but okay. Your calculator, the brain calculator should work. Let's say you have $1,000. You're getting 20% average return for 2 years. How much do you have? I'm going to give you 4 answers. I just want to, okay, how much do you got it? $1,000. 20% average return, okay, for 2 years. How much do you have? Any volunteer? 1440. Any other volunteers? Okay, unfortunately there's no $10 for this, but answer is right, but let me show it to you. I'm talking about 2020 vision, like something thought to be true, wasn't true, look at this way. Okay, sorry. So 20% 1 year, 20% second year, and average is 20%, right? That's 1440. The second is correct too. 60% 1 year you got the return. Second, you lost 20%. How much is average? 60 minus 20 divided by 2? 20%. I'm sure you got it now. The third answer is right too. First year got 100%, trust me, back in 90s there were stocks, mutual funds, they were giving you 100% return. And the next year they wiped out of the names and stuff and everything. Guess what? That's a 20%, at 800. And yes, you got it right. The final is right to 140% return 1 year, and the next year negative 100, like the whole thing is gone. 140 minus 140 divided by 2 is still 20. Something you thought to be true wasn't true. Before you make any decisions on these lines, please talk to me. Okay, now I want to give you some potential future tax legislation. I'm not teaching you tax. We are the expert in the tax in the sense like we talk and deal a lot. Seriously, again, this is a little disclaimer or little advertisement in between, I should say. Year end is coming fast. We are almost there. If anybody thinks you're going to pay a lot of taxes, you have to consult or contact me before December 10th. I can tell you few things, even if you're a W-2 employees, business owners, you have a wow factor in there. Even the W-2 employees, You call me, contact me, promise you I will save you at least, if not more, between 30 to 40% on your taxes that you think you are going to pay, but we have to take action. It has to be done, all the process and things have to be done before December 31st. That's why December 10th is the kind of deadline that hopefully we'll be able to do it. But let's talk about the taxes. Anybody for $10? What was the highest tax bracket in the US ever? 40%, 70, 50. How about 94%? I'm not kidding. If you look at it right here in 90-50, it's right here. It was 94%. I'm sure you know this young, handsome gentleman. Who is that? Reagan. Okay, do you know Reagan was a film actor, right? He used to make only 2 movies a year, not the 3, not 2.5, just 2 movies a year. He was getting 200,000 each movie, 400,000. Why? Because after that, if he makes a 3rd movie and if he gains anything, get the money, everything will go to the taxes. So he always did that. Now look at the time and factor. When he came in for the president and he won, you know that, right? He had 2 terms and stuff. Jimmy Carter was the president before him. He won, like, you know, he had a competition with Jimmy Carter. Do you know what was the tax bracket at that time? 72%. Go check, seriously, it's right here. It's a 72%. So, you know, our good friend, he became a president. Guess what he did? He promised people, I will take down the, you know, all the tax brackets and stuff. Guess what? Within a month, legislation was passed. He got the tax bracket to 39%, if you remember. Kid you not? Punjabi कहते हैं ना toll ते सारे वजह उथे there were everything. But when after 1 year, when people filed their tax returns, oh my goodness, we paid more taxes in 39% than the 72%. Any of you remember that part? Okay, so what happened there? Think about it. Again, this is something you thought to be true, wasn't true. That goes into that category. As soon as our new president took the charge, he said 39%. When you or everybody else went to file the tax returns, you know, at 72%, everything was tax deductible. If I make 100,000 at that time, my food, kids' education, I buy a shirt, I go out and eat. Okay, I rent, everything, every penny was deductible. I'm sorry? Including credit cards, yes. Everything was tax deductible. If I make 100,000 after I spend all those things, me, wife, 2 kids, we left with a $10,000 or $15,000. I pay 72% tax on 15,000 or 10,000, whatever it is, right? Okay, so Mr. Reagan took away all the deductions. No more deductions. Now the 100,000, after some certain, mortgage or something deductions, let's say my income is 85,000 now. And I have to pay 39, let's say 40% tax on 80,000 or 85,000. You see, it's something you thought to be true, wasn't true. So legislation, now we are talking more right now. Biden and everybody, we have to go up. So this is how I don't want to say, I'm not, going to talk about Democrats or Republicans, but everybody does this way. This is how the system works. So long to short, the next thing is, who all are here business owners? They have their own practices, right? Who all have a 401k pension and retirement plans through that, right? So what happens in the retirement plans? We'll talk about that. Only 3 things we're going to talk about. We talk about, of course, the taxes, the retirement plans, and owning a home. I won't talk more. We have a lot more things to talk, but this is the only one time I have it. So you have a pension plan. I'm not talking about with the W-2 employees. I'm sorry, we cannot do much on those lines with the pension plans. So if you have your own business, you are the owner of the business, I can make your contribution for the 401k or retirement plans, let's put it this way. So we can make your contribution tax deductible. That's what you want. That's what people make a contribution. If I ask 90 people to hear, why do you do the 401k? Oh, we do it, we need a tax deductions. Okay, but on the other side, when you reach at the retirement, guess what? Every penny is taxable there, right? I can make a pension plan legal, legitimate, no hanky-pankies. We don't work 35 years in the business. Your contribution will be tax deductible. Guess what? When you take the money out on the other side, it's going to be tax-free. Think, let it digest, please. The day you contribute, you earn almost 40% or more right there, because at the end, on the other side, you're not paying any tax. So we call it, like I'm sure you probably know Tom Hagna, big guy in here, Phoenix area, don't worry, retire happy. But how do you retire happy? Retirement, I'm going to go quickly. Of course, you have to have some plan and something. Make sure you have a plan. Maximize Social Security. By the way, again, a side note, Social Security, if you want to talk about it, we can talk about it. It's complicated, but there is a right time to take a Social Security. There is a correct time. Believe it or not, when we go in the field and talk to people, 90% of people, when they're taking Social Security, that's becoming taxed. You already paid the tax, you already done. Why? Because we didn't coordinate it with our other income. We did not coordinate with what else I'm going to get from anywhere. Okay, most of us have the properties, the rentals, and all those things. Everything counts. So make sure Social Security, talk to an expert. We are more than happy to help for anybody. Okay, hybrid retirement, some money from here, some money from here. We don't take one from one thing, everything. Okay, savings, of course, inflation. Do we have inflation? Yeah. Oh, okay, yeah, we have to make sure that we save from the inflation. Okay, guaranteed retirement income, guaranteed, that's a key word here, guaranteed. Do we have a guaranteed retirement income? 90% no, but we can make it guaranteed. Okay, and of course, the long-term medical expenses, there are a lot of them, so we have to be careful. And who all have the homes here? Who owns the homes here? Oh, okay. Do you have equity in your home? Make sure, use it properly. Equity can be used in your favor, not, I know we all scared of certain things. Oh, I don't want to use my equity because interest and the loans and all those things. Trust me, there is a big place in the financial planning area for the equity. Okay, have anybody seen the US debt clock? Yeah, okay, there's one person. I don't want to go, it's a very complicated and very big thing here, hopefully. Okay, yeah. So if you see it, this is the only number I'm worried about or I'm concerned about. This is, as of today, the debt. It's a very live, there's a lot of things. You can, any city you live in, you can look your city's debt, you can city's income, you can everything. It's a very comprehensive and goes all the way down. US population, anything. So 31 trillion is the debt as we speak right now. And trillion, think about how many zeros you're going to put behind it and how you're going to help it. And remember, all these things will be definitely impact you, me, and our kids. Okay? All right. Again, the question is, what have you done to protect your biggest asset? Whatever is your biggest asset. Sorry? Well, good. But, children are good. You protected them and stuff, but now they're making money, right? Well, they will be soon. Mostly they will be physicians too. And then how we are making sure that they know everything. Will there be another financial crisis? Yes. Yes? Oh, okay. All right. What is the best age to take a Social Security? Question, again, think about it. Well, it all depends. Trust me. We have advised people at 62, 65. It depends on. If I'm in a very good health and I have enough money, yeah, 70 may be a right answer. But trust me, there's a lot of other factors comes in. If I have a big pension plan coming up, okay, I will wait for my Social Security, or I will take it first and then take a pension plan. Again, please don't take it right. I always say, if something you thought to be true, just consult. We don't charge anything for consulting. When you scan the code, the QR code back there, there are small sheets on there. There is a one button on there, 15 minutes free conference call, and we will give you the answers. You want to talk to our CPA, we need to set up a time. He will be more than happy to review your up to 3 years of tax returns. He will give you the result, and if there's any changes that he think has to be made, he can go back and amend it also for you. Checking it, no cost, but amendment, they charge some fee, like let's say if you get 100,000 back from IRS, they'll charge you 10 or 15% of that. Okay, but otherwise there's no cost. So make sure we are in a good shape. Okay, especially, I know this question I always ask to the females, would you like to be rich or would you like to make sure never, ever, ever be poor? Yeah, so you have to answer these things and talk to us on that. Okay, what would you feel like to be out of work for 30 years? That's our retirement. I know I have seen a lot of people are working late and stuff and later ages and stuff. Do it, fine, you keep yourself healthy and stuff. But this is something which is very scary. 30 years of retirement from let's say 65 to 90, 95, 85, all those things. It is a very kind of challenging. In any books that I'm sure you read, is there anywhere it's written, you must lose a lot of money to make the money? As I told you, our group has very fortunate to have Mr. Guy Baker, and if you see his kind of like, his performance for the last 30 years, I think the max he lost was even the worst time about like 7 or 8%. So he has something that, something right he's doing it. Now, again, question, will the taxes be higher in the future? Yes. What are we doing to save those taxes? Let's do that something. Thank you for being honest on that. Seriously. Will the benefit be lower? Taxes will be higher. We have so much debt. Naturally, the benefits, all those things we call Social Security or Medi-Cal, Medicare, whatever, what state and city you are in. Okay. And we always have a joke. Will the government try to create inflation? I mean, it's a joke, but answer is internally yes. Okay? All right. So if the inflation is there, what happens? The volatility, right? Market goes down. Market is like, not behaving well. All those things are sometimes controlled by people we don't know. Okay. Of course, question again, would you like a upside potential with a downside protection for any of your things, investments and all? Did you know that you have a guaranteed income for life option? If not, please call us. Please call us. Seriously, I'm not kidding. Guaranteed, no matter where the market goes, up, down, sideways. All right. Did you know that you could recapture previously paid taxes? I just mentioned to your CPA will review your last 3 years and try to give you the in writing, not like a verbal thing. What can be done? Anybody has heard 0% tax bracket? No? There is a 0% tax bracket. Promise you, Google it today. 0% tax bracket. Let's work towards that. I know it won't happen the same day or same month. I mean, it's a process. We can take you to a 0% tax bracket. Okay. The IRS will give you a deduction. I told you about the donations. Today, for the charitable gift that you don't make until you and your spouse passes away. Dr. Chopra was talking about like somebody gave a 5 million. If that person took the 5 million and gave it to the university or college or something, if I were him, I will take money with me, but put a deduction on the calendar or on my tax returns and all those things. You have to have a good CPA and a very good person. Okay, have you ever paid tax you didn't have to, or have you ever paid the tax you didn't want to? I was saying, I said I'm not going to discuss. That's a answer. It's a yes answer. Okay, that's my slide on the charitable. Making the most of the charitable gifts. Again, please, just talk few minutes, few things here and there. We can guide you on that. Now we are talking about mortgages. Okay, the major areas where the people are transferring away their money. Remember we talked about we are unknowingly, unnecessarily, unintentionally, we are transferring the money, giving the money to somewhere else which doesn't need. Okay, those are the mortgages, taxes, qualified plan, your pension plans and all those things. When I say qualified, doesn't matter, it's a 401k, defined benefit, defined contribution, SEP, IRA, anything that has it, that goes on. College planning and expenses like car payments and the credit cards and stuff. These are the places that we are losing money unintentionally or unintendedly, but we are losing money. Okay, I believe that I can have a bigger impact on your financial future by helping you avoid the losses rather than helping you pick up the winning stock. Trust me, if you avoid the losses, your stocks, your money will do much better. And it makes a little or no sense to have $1 million onto and discover that you lost $1 million on the way. I have thousands of examples. Oh, I had $5 million, but suddenly I have only $2 million. Or, market went down and all those things. Yes, it does happen. Did you know that there are strategies that will pay you tax-free income if you live too long, die too soon, or need a long-term care coverage? Just a quick side note again, long-term care, if you don't have it, please have it. Very important. Long-term care things, what it covers, your regular health insurance will not cover. It's a very important thing. Please. I prevent successful individuals from forfeiting taxes that they are unnecessarily paying. If you are one, I think we can help. We help accumulate, protect, and preserve assets while minimizing income and estate taxes. Estate taxes is something big thing you guys have to be really considering or looking into it. You know the estate taxes, right? So there is a limit, more than that, you have to pay the taxes. And it's a very complex jungle out there. Okay, now, I think it's the last portion, houses. I'm sure we all own the houses, right? And besides our personal house, we own. How many of you, please, if you want to raise your hands, how many have you the rental properties? Okay, let me ask one person who want to volunteer. Whose name is the rental property?
LLC.
Your own. So that's a disaster waiting to happen. Sorry.
I have an LLC.
No, but did you transfer the property to LLC? Yeah, so it's like not having an LLC. Okay?
No, I do have property in an LLC.
Oh, okay, that's what I meant.
Rental, I have it on my own.
Well, okay, so there's something that needs to be looked into, talk over and stuff. So owning a house, this is the house as seen by you. When you have your house, that's what you see it. If IRS, they see like this. Oh, or maybe this way. Right? This is how the IRS looks at your house. And guess what? The appraisers looks like, say, no, this is not worth it and stuff. Of course, you want to sell it, the buyer looks at it this way. Last but not least, your lender looks at it this way. So you decide, which way, where, when, and where, and how you want to sell and pay the taxes on the houses. But on a serious note, would you consider your personal home as an investment? Yes, no, yes, no. It's worth 5-minute conversation with me. I'll tell you yes or no, and then you can decide. Okay, what is the rate of return on the equity of your home? Anybody? Thank you. Smart, very smart. What is the rate of return on the down payment? You make a big down payment so that my monthly payment is low. Is there any return on that? Think about it. Thank you. Thank you. Okay. Do you believe it's important to pay off your home as fast as you can? I have people running, I'm paying the house. Think about one thing. No, thank you. But think about why I'm talking about this thing. Normal home loan is 30 years. Normal home loan is 30 years. Unless you live in Japan, it's about 50 years. Seriously, there is 50-year loans there. Okay, so 30-year loan, inflation, remember we said there's inflation and there's going to be more inflation. Dollar today is $1. Bank is telling me, pay me in 30 years when the dollar is like 30 cents. Why I'm in a hurry to pay the bank today? Hey, I'm a good guy. I paid your money. I paid you thing. Oh, I'm free and clear. free and clear is dangerous also if you are not asset protected. That's why our attorney makes sure like your assets are protected from any bad things happen tomorrow. Do not rush to pay the home unless there is some other reason. If I have a $5 million my house, I need a $2 million payoff. No, I will not pay it. That $2 million, I will put it somewhere and do it. If you ask the big guy, even the Trump is very famous for it. You tell him, go buy this building, this hotel. He will send his people. He say, what's the minimum I have to give it to you to own the hotel? That's all. Minimum, smart, use your money good way. What else? Okay, does an additional payments increase the value of your home? No, that's why we don't pay it fast. Yeah, there's a 5 risks on the retirement: market, taxes, inflation, longevity, survivorship. Okay, again, which is the most dangerous one in all these 5? Here. Sorry? Survivorship. Who else? Well, I'm sure we'll say all 5 of us something. No, seriously, think about it. No? Longevity is the most dangerous one. People are living longer, and that's what we are facing. When we go up in the field and we talk about it, longevity is the biggest concern as of today. Okay, last thing, I'm sorry, qualified plans. Do you think the qualified retirement plans is tax savings? No. Thank you. Anybody else has a different opinion? We can talk. All right. What are the 2 guarantees the qualified plans have? Anybody? 2 guarantees. You are at risk and you have to pay the taxes. Think about it. Any qualified plan, you are at risk only. Let me ask you quickly on a side note. Let's say, Dr. Chopra, you and I start business. I want you to invest the money. I want you to work. Okay, I'll come and take 50% at the year end. Shall we? You want to share? Yeah, that's what I'm saying. That's the thing. So be careful before you. Yes, people who are employees or even the employers, if you have a plan there and there is a match of the company, please do not leave the free money on the table. Don't take me wrong. We are not against the 401ks and stuff, but make sure that your money worth is there. That's all. Okay. Are the taxes going to be higher, lower? We talked about it earlier in the future. Okay, when should you take money out of your qualified plan? Anybody? 70 and a half as of today. Oh, actually 72 now. 72 now, sorry, yeah. But also when you sign up for the 401k and apps, did you sign up for a 30% loss or a 40% loss column? There is a one, one of those things. Pick up 30% loss or 40% loss. Which one did you pick it up? You don't know. There was no column on there, sorry. There's no column, but then 30%, 40% loss is your tax bracket. Listen, when I started in this business back in '88, I was maybe I was like 25 or 30% tax bracket, right? I start putting 401k and 401k and 401k. When I'm ready to retire at 65, I'm into 50 plus percent tax bracket. Think about it. Not a smart idea. Save money on a 20, 30% and paying taxes on a 50%. Just think about it. Don't shoot yourself. Don't say bad things happen. We can still change it. You're still alive, running, we can still change those things out. And this is the key one. If I could tell you the exact day that your retirement account will suffer its biggest loss, would you like to know? Great. We have something to talk. If you knew you could do something to prevent that loss, of course, would you do it? Yeah, here I am. Do you have a cash? This is another I need to pay more concentration, and I think we talked about yesterday. All of us, trust me, I know a lot of you here. All of us, hey, I made it. This is what exactly I went to one of the friends, his office. I made it. Gurdayal, I made it. I said, good. What do you mean by you made it? I have a $3.5 million in my retirement. I'm getting retired. I said, what? I said, do you have 1.7 million? He goes, no, 3.5 million. Look at my tax, my statement. Sir, who is going to pay the taxes on it? What taxes? There are no taxes. I said, it's my money. I said, no, it's not your money. All the money that you put together in your retirement will be taxed, every penny of them. Guess what? You cannot even donate it. You cannot even give it to your wife or to your kids. Everybody will have to, pay the tax. Whoever touches that money will have to pay the taxes. Talking to us, dealing with us, I promise you, if you have a 5 million in your account, 2 million, 1 million, almost 50% tax going to be happen. And we can bring that tax from 50% to maybe 10 or 12, maybe 15%. Again, everything legal, legitimate, within the IRS guidelines, and they will, your CPA, our CPA, if you have an advisor, trust me, they will tell you, how come I didn't know about this thing before? Please. Okay, how much of these retirement accounts are yours? You know that. It's almost 50% is yours. Rest is all Uncle Sam. Is your retirement plan, this is another big one, self-completing in case you become disabled or die? If I started a pension plan today and I'm contributing, let's say, $5,000 a year, whatever, and something happened to me, will my family get the money? No. That's it. Whatever you put in, plus interest you got, minus taxes. Think. That's why I'm here. I want you to think. Go out of the box. Okay, again, small thing. I'm sure you probably know, you're smart people. If $1 becomes 2 next day, and the 2 becomes 4, 4 becomes 8, go on. This is a 10th day. Is about $1,000. Anybody want to take a guess what's on the 20th day? Anybody wants to take a guess? Huh? Thank you. It's about $1 million. In fact, you can see, you can check it out. I mean, these things, I know in real life may not happen, but this is to give you thought, think, look into it before you make your decisions. Anything to do with the money and the specialty on. Okay, now the same thing, if I have the same thing, but I think it's probably 20 or 30% tax bracket. Okay, in the same thing, 1 doubles and you pay the taxes, 2 doubles and you pay the taxes. The 10th day, it's only $226. Guess for the 20th day? How about only $51,000 versus $1 million? Think, that's all. And the last thing is, this is the way our company, we have a proper setup. We go by step. If you call us, we are not going to jumping over everything. We get all your information, pure confidentiality. We are fiduciaries. Anything you tell us remain between us and you for sure. And we will send you in writing right away. Hey, this is our paper that, this is a total confidentiality agreement we sign. We sign it. We don't want you to sign it. The worst thing will happen if we are talking to somebody, yes, we are working with them. That's the worst thing. We don't say how, where, much, and all those things. Okay? And so we work in like a 3-bucket thing. Taxable, tax deferred, and tax free. It's better to be, balanced on everything. Or we call it like, hey, now, later, or never. When would you like to pay the taxes on the growth of your money? Now, later, or never. You pick. Yeah, but we probably have to keep a balance between now and later also. So, of course, in the taxable things, CDs, mutual funds, stocks, bonds, I know we cannot put everything in there, but these are the things that you know. And the tax deferred is, of course, our 401, 403, pension plan, 457, IRA, and all those things. On a tax-free, there's a Roth IRA, there's a 529, I think we haven't added in there, LIRP. I'm sure you want to know what is LIRP, L-I-R-P. Yes? Okay, what's next? Retirement plan. Who said that? Wow. I have somebody very sharp and intelligent here. She knows the answer of a lot of questions. Okay, so reverse mortgages. That's what I remember I told you, like, don't take it as a bad. I know there's so bad concept. Oh no, reverse, we don't want to do it. It's one of the biggest thing happens. I have a client, I promise you, and huge house. The kids, they're both doctors. Guess what? No, mom, we want to live on the beach in a small condo. The house is worth maybe around 7-8 million. No, mom, sell it. I don't want it. We don't want it. We are going to live on the things. So reverse mortgage is not bad things, trust me. Do not take it unless you know ins and outs of it. Again, we have a specialist on that part also, but just to tell you, of course, the 529 plans. Now, these are the few questions, the last ones I'm going to ask you. If you like a tax-deferred growth, would you like a tax-free distributions? Would you like a...
You forgot a few things in the never plan.
Yes.
Cash and jewelry.
In a never.
In the never one.
Who said it's a cash and jewelry is never plan?
Oh, I don't have to tell nobody, right?
Well, but when you earned the cash, you paid the taxes. It came from there to there. I'm sorry, the bucket changed.
Oh,
Thank you. Thank you.
I was talking about the lady right next door. I can buy jewelry and don't pay.
Yeah, but you buy a jewelry. Smart. Are you open for any job or any like working with us? Please, please. Okay. Who wants the comparative returns? Yes, sir. Hanji. Hanji? Yeah. Yeah, but then remember, it's after pay the tax, and that's why you paid for the life insurance. Yeah? By the way, if somebody wants business owners, please, I'm sorry, no discrimination here. Business owners, I know he talked about the life insurance, that I have to talk about it. If you're a business owner, you want a policy, and we can make the premium tax deductible. Promise you, go talk to 1,000 brokers out there if they can say yes to this thing, but I can say yes with the very strong in writing things. Business owners, sorry, nothing, nobody, no W-2s. Now, business owners, let me ask you this thing. You have a LLC for your, rental. That's your business. We can take that money from there, buy a life insurance, and make it tax deductible. Think about it. Anybody who has like rentals, that's a business. Just you have to keep it separate. You have to make sure, there's a line between both of them. Hanji.
My practice is my business.
Your practice is business?
Yes. My practice, my medical practice is my business.
No, but you're not an employee of any hospital, any other things. It's your own corporation.
It is my own.
That's your own business.
Correct.
Yeah, that's your own business, absolutely. Okay, and one more thing. It's not about the life insurance. Oh, you know what? I talked to a few people and said, hey, you need a maybe at least like $50 million policy, $50 million death benefit. Oh my God, there will be a lot of premiums. Yes, but you need it because of your assets, because of your, the loans or the things of that nature. Something happened to you, you need this much to pay off everything and make sure the family can live it, your home loan, your other things and stuff. Oh, it's too much premium. No, listen guys, seriously, I'm sorry. I should not talk guys, but listen, we can do that policy zero out of your pocket. We have the banks, they finance the policies. Guess what? The bank has nothing to lose. They're getting a guarantee of their money from the insurance company. You have to be just credit worthy and have to have earnings. Any number, and just give it amount. Okay, I want 70 million, 100 million, 200 million, 1 million, whatever it is. Think about those things. I know I'm giving you a lot. It's an afternoon after this lunch and the meeting more, and I'm almost done. So keep these thoughts in your side and let's talk. And again, there is a QR code in the back. Okay, competitive returns, you want it? High contributions for your pension plans and stuff. Your people can tell you, like, you can put only 10,000 a year or 5,000 a year because of the regulations. If you want to put $1 million in your retirement, please, we can do that, seriously. But of course, there are some requirements and things are there. Additional benefits like a long-term care, like a disability, like other things that you probably won't know, like, we can add those things. Collateral options, whatever the business we do, if you want to collateralize that thing and use that money for something else. That's a smart way of doing it. If I have a house and I have a $2 million equity, I borrow and have something else. Okay, of course you want a safe, secure, you don't want to lose the money. Okay, no loss provisions. And guaranteed loan options if you want to borrow from there, no filling out the paperwork and all those things. Of course, liquidity, use, and control you will have on that money. If you need any of these or all of these, of course, the deductible contribution. Okay, please call us. Benefit Consultant is my company's name, QR code there. I'm sure there are some pens there, phone numbers and stuff. Do not hesitate. I would love to do it. benefitci.com is our website, and I'm your family CFO. Thank you very much. Thank you for your attention, and I really appreciate it.